Hi everyone, and welcome to another edition of the Property Update. I'd love to introduce you to the property expert and my co-host, Tom Haigh from My Money Sorted and Groundswell Property. Now, Tom is a licensed buyer's agent with a 16-year career in property and construction, so he knows what he's talking about. Hey Tom, how are you?
Hey Jackie, couldn't be better. Great to be with you.
Thanks for being here. All right, let's start the way that we always do with your list of what's hot and what's not.
Well, I'll tell you what's hot, Jackie. The Australian women in our Olympics team. Hasn't that been incredible to watch the success of some of these amazing athletes? And I think close to 2/3 of all of our medals have been won by women at this incredible game. So it's been a real pleasure to watch. What was your favourite event, Jackie?
Oh, gosh. Okay, I really like how, and this is going to be controversial, but I like how breakdancing has definitely burst onto the scene and it's bringing a lot of awareness to the sport, regardless if you think it should be an Olympic sport or not. So I really do think that that's a good thing for breakdancing. And I loved the skateboarding. I thought that was really
How
cool.
good was the skateboarding? It was an amazing haul there, wasn't it? 3 medals, Arissa True, of course, a 14-year-old star, 1 gold for Australia. It was incredible to watch, wasn't it?
It sure was. It was just incredible.
Absolutely.
What about you? What was your highlight?
Yeah, so skateboarding was fantastic. Obviously, the swimming is just an incredible team for us at every Olympics, and this one was no different. But all in all, a fantastic showing, and certainly topping out our What's Hot for this monthly update. Alongside of that, we've got a few star performers in the Australian market, and those were the capital cities of Adelaide, Perth and Brisbane. Those markets continue to hum along at a rate of knots. Sydney, to a lesser extent, Sydney's been a bit of a quiet achiever in the last 18 months with a month-on-month growth running 18 consecutive months, which is quite incredible. Not to the kind of heights that we've seen, of course, in Adelaide, Perth and Brisbane, but certainly continuing to plough ahead in terms of those median prices. Some highlights here. Adelaide's dwelling prices are tipped to eclipse Melbourne in August for the first time ever, which is just absolutely insane. Amazing growth in Adelaide. I dare say the sun may be setting on Perth from an affordability standpoint. Now, interestingly, Perth is edging closer to Melbourne's median house price for the first time since 2015. So that was post the 2015, the major mining boom just prior to that. There's just a 1% difference between the median house price in Melbourne and in Perth at the moment, which is kind of staggering. Will we see a slowdown here, Jackie? Time will only tell, but I dare say things are really at fever pitch at the moment. So what's not, I would have to say, other than Queensland's NRL size at the moment, those Cowboys and Dolphins are hanging in there, but it looks like it's lights out for Brisbane and the Gold Coast, unfortunately. So, look, I guess the main theme in what's hot, what's not this month, I beg your pardon, is Melbourne and Hobart, which are continue to struggle. And Darwin, where incredibly dwelling values remain 5% lower than they were back in 2014. So Darwin remains by far our most affordable capital, with dwelling values sitting at just $507K.
Amazing. And so what are some of the key trends and driving factors that you're noticing in the market at the moment?
Look, a real emerging trend at the moment, Jackie, is the investor market. So investors are returning in droves. Investor loans are up 24% in the last 12 months. And in WA, where, as I said, things are reaching fever pitch at the moment, that figure is close to 50%. So there's a lot more activity for investors out there who, I guess, seem to be putting aside these concerns around interest rates and the relative affordability and wanting to get active again. The other thing that's really trending at the moment is the sub $1 million price point for dwellings. So that is a price point that continues to absolutely plough ahead. Heap of interest in all markets, again, with homeowners and investors alike chasing affordability, with rates remaining stubbornly high. I guess the other thing is stock levels. So there's a massive story that the figures around stock can tell us in terms of where the market's at and how markets are performing compared to one another. So a great example here is the stock levels in somewhere like Hobart. Now, compared to the 5-year average, stock levels are 50% higher at the moment in Hobart, which shows that it is obviously a buyer's market. Sellers are really struggling to find the prices that they are looking for. Now, if we compare that to somewhere like Perth that we mentioned earlier, where stock levels are 45% down on the rolling 5-year average. So massive story to tell there, hence why Perth is a booming market at the moment. Prices continuing to grow month on month. Adelaide, stock levels 42% 22% down, and Brisbane 30% down on that 5-year average. So that's incredible. Now, if we look at Melbourne, we touched on Melbourne earlier, continues to struggle. Stock levels are up 16% on that rolling 5-year average. So interesting to see how that is translating to prices and activity in the market, of course. And another interesting fact for you, Jackie, is construction prices. So for the last 3 years, particularly the COVID period, we saw construction prices go absolutely through the roof, which has created a real challenge in terms of housing supply. Thankfully, and this update according to CoreLogic, our monthly rate of construction price growth has slowed to its lowest value in 22 years. So that's fantastic news for us as a nation, where obviously we're just really struggling to bridge that gap between demand and supply at the moment. So with continued price growth and profitability being restored, I think we should see a real shift in what is going to be the case from a supply standpoint.
Absolutely. And so can you run us through the clearance rates for each capital city, please?
Yeah, look, it's an interesting one with clearance rates at the moment. I guess across all the cities, relatively similar in terms of the clearance rates. So Sydney at 68%, Melbourne 69.5%. Melbourne do love their auctions, so it's not a surprising figure. But when you compare that to a really hot market where clearance rates might be at 85 or 90%, it really does show what's happening or playing out in Melbourne at the moment. Brisbane 73%, Perth 67%. Perth hasn't typically been a city with a great level of interest in auctions as a sales campaign time. Canberra is down at 52%, and Adelaide is edging closer to that peak figure that I mentioned for Melbourne, where auction clearance rates are at 89% at the moment in Adelaide.
Awesome. And my last question for you, and the one that we kind of take a deep dive on, what are some upcoming suburbs in Brisbane for first home buyers and first-time investors?
This is by far our most popular topic at the moment, Jackie, and we've had our earload to the ground. We've been canvassing some of the locals in Brisbane just to find out where are those hotspots. So where are the first-time investors and first-time home buyers focusing their attention now? A couple of local tips: Chermside, Fortitude Valley for apartments, Hamilton, been really popular for apartments recently. We also had a deep dive into some of the data that we track, Jackie. So we track roughly 60 different data points on each suburb in the country each month to see how things are trending. And there were 3 absolute standouts for first-time buyers and first-time investors in Brisbane. So what we try to focus on here is the more affordable suburbs, so ideally those sub $900,000, and we identified 3 in particular: Karana Downs, River Hills and Boondall. So 3 real standouts, and I'll share why. When we're looking at these types of locations in terms of desirability and then potential for price growth as well, there's 3 key figures we look at, of course. So median house price is a really important one to make sure that obviously the budget that we have is going to buy something decent, a family home in that location. Then we look at things like the percentage of owner occupiers. Now, what that tells us is how many renters live in a location versus how many people living in that area or that suburb are owner occupiers. Owner occupiers have a tendency to have a bit more pride of place. They'll tend to go and spend money. Bunnings on a Saturday, they go and buy their sausage and a tin of paint, and they're out there renovating the home, adding value, of course, which is a good thing for long-term growth. And of course, the other one is average household income. So incomes are incredibly important. It gives us a picture of the socio-economic profile of an area, how desirable it is, and also it tends to give us an indication of the relative affordability. So what people are earning will have a huge bearing on what they can pay for housing, which of course will be a good indicator of long-term price growth. So for context, the 3 suburbs that we mentioned, so Karana Downs, we have got an average or some median house price, I beg your pardon, of $850,000. At the time we record this, the proportion of owner occupiers in that market is absolutely massive. So 89% of all people in Karana Downs are owner occupiers. And
wow,
it is huge, absolutely huge. So we tend to find that a balanced market might be closer to, say, 70%. So 70% owner occupiers, 30% renters, but obviously really tightly held location for owner occupiers, which is fantastic. And compared to the average household income in Australia, which is around $1,700 at the moment, the average household income rundowns is $2,255. So obviously a really strong location on all fronts. River Hills, obviously to the southwest of the Brisbane CBD, so 25-minute commute roughly, give or take. Median house price is $850,000. We've got 24% of people in that location are renters, so 76% of people are owner-occupiers. Average household income of $2,059 a week. And finally, our third hot tip for Brisbane first home buyers and investors, Jackie, is Boondall, with a median house price of $856,000. 27% of people in that suburb are renters, and the average household income is $1,887 a week. So again, three great locations for investors to consider. They're all roughly within 30 minutes of a commute to the CBD. So great access to jobs, employment and infrastructure. And obviously those are really important things for all investors and owner-occupiers to consider when making their next move.
Absolutely. I think I need to jump in my car and go for a drive, check out these new suburbs. Even though I live in Brizzy, I don't think I've ever been to those suburbs before. I'm a shocking city slicker.
Well, it is quite incredible looking at the data there, Jackie, just how affordable Brisbane remains. Obviously, it has had incredible price growth in the last 12 months, 18 months in particular. But by comparison to, say, Sydney and Melbourne, where people have become accustomed to driving, say, an hour and a half to get into work each day, to be able to jump in the car and be in the city in 30-odd minutes, it's pretty incredible.
Not bad at all. Just got to watch that traffic on the highway.
Absolutely.
Bumper to bumper sometimes.
Fantastic. And that is a wrap for us this week, Jackie.
It is. Thanks so much for your time and your expertise, Tom. Love hearing all about this. And everyone who's listening and watching, we will catch you next month.
Thanks, Jackie. Look forward to our next update.
Thanks, Tom. Bye.